Okay, let's get into trade selection. Trade selection is really part art, part science as always. We want to, of course, always trade with confidence. So what we're going to do is we're going to take a look at some of the index options that we can put positions on and begin building our portfolio. And that's what we really want to focus on, is the idea of building a portfolio. It's not just putting on a position here that doesn't really make any sense. What we want to try to do is create a portfolio of positions that really helps us achieve our objective of generating monthly income from the market. So in our test account here, what we want to do is we want to try, and obviously we first want to look at the indexes that we want to put positions on. And normally what I do is I take the EEM, which is the Ishares emerging markets. Let's take a quick look at a quick graph of it. This is the Ishares emerging market ETF. It seems to be trading very well for us. It tends to trend in a pretty nice pattern. It tends to stay within channels here. Like I said, I'm not a big technical analysis guy, but what I like to do is I like to see support and resistance points, and I like to check channels over time. So I mean, like, this has been in a channel now since back in early October. It's just kind of stayed in this little channel, kind of a downtrend channel here. I've got a potential, these blue lines are a potential uptrend channel that it might be following, but it did hit this resistance right in here at this upper, the old channel line that I've got at the upper resistance. So we may continue to see it trend lower. On the other hand, I've got this blue uptrend channel, and just in case it changes directions. But as you can see right now, it hit a high of around 144. It started to drift down here over the last 4 or 5 days. Now, how would we play this? You can see that it's been in a downtrend. It's been following this channel pretty closely. When it's dipped below, it's come back up and it's hit the upper trend line now. 1, 2, 3, at 4 points. So there's a solid downtrend in effect. It's also below its 200-day moving average. So, it got above it, now it dropped below it. So that even is a stronger indication that it may continue lower. So how do we play this then? How do we play this? Well, in most cases, what you're going to be doing is I like to put on double calendars as my opening position. A double calendar with a calls just above the current price and puts below the current price. At this stage, because it's in the upper quarter of this channel, you might want to give it a little bit more room to the downside. So let's say if it does start to follow this blue line, it starts to follow this upward channel here. I want to try to find puts right around the 132.50 level, which is the edge of the lower channel line that I've already set up here. We've got 1 point on it, so it's not really a confirmed channel line yet. But on the upside, you've got 1, 2, about 3 points where it's hit, and it looks like it's trying to follow it. So if it does, I mean, obviously we cannot predict the future. I've tried to emphasize that as much as possible throughout this course, is that you can't predict the future. All you can do is kind of follow what the trends are doing, and then as we go along, I think the most important thing that you can do is know how to adjust your trades after you get them in. We are at a position now where we need to put this on, because I like to put on positions. If you look at the May options, we're 32 days out of expiration. We like to put them on between 30 and 40 days. We've got our Junes out here at 67 days, so we'll probably do a May-June, but we have to look at the volatility levels. The volatility levels, if you come over here, are pretty close, although June seems to be just slightly higher. We can also take a look at the Septembers and see how they what the volatility levels of the Septembers are, but that's pretty far out. I mean, if I'm writing the May options, selling the front month, I don't like to go more than 3 months out. So if I go 3 months out, that's June, July, August. September is a bit of a stretch. So because once you go out a little bit further in the months, then volatility could be an issue. Could be an issue. So, but we're going to take a look at those when we go to trade selection. Right now, we're still looking at the chart. So what we want to do is see if we can't hit this. Do a double calendar, maybe around the 145 level here on the upside because it's showing some resistance here, and maybe 132 if they have that strike, or 130 on the downside. That may not set up a very good double calendar for us, but we can try it out.